Hi everyone, let's go over my medium time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my medium time frame bullish scenario, where we have a WXY that is already finished in this particular scenario after wave Y finished with a 3-wave structure and then a wave 1, wave 2 and a third wave to the downside. An alternative is of course that this move to the upside is still part of a bigger 3-wave structure and then this to be a wave A, followed then by an expanding flat in a B and then you get a C to the downside or a WXY. It doesn't really matter, as the most common target area for wave Y will then most likely be between the 1 and the 1.236 over here, which is between 23.7k and 22.6k. An important target for potentially a move or continuation to the downside is the double top that we have at 27.4k. So if price is going to reach these levels, it's very important to wait and see what price is going to do. Is it going to wick and move down, or is it going to wick, range a little bit and then continue to the upside? We will see. And also the CVD divergences by that time can give us a little bit of an indication of what might happen next more locally. If we then go to the bearish scenario, we still expect further downside, where we then have a W, an unfinished X, and then eventually a Y to the downside in a 3, 3, and then eventually another 3-wave move to the downside. In this wave X, we're then looking for an expanding flat, which is a 3-wave in A, 3-wave in B that is already finished. Most common target for wave B is the 1.236 and the 1.38, pulled from the low of W to the high of A. And in this scenario, wave B has to be finished. So this has to be a 3-wave structure. Why? Because we already hit the most common target area for wave B. And if price now pushes up and then comes down again, then, well, the most common target area has already been hit. We only have a rare target left for wave B, but after seeing a push from this area to the upside, you just don't want to see price going down again. So that's also the invalidation, where in a wave C, you want to see a 5-wave structure to the upside, where then the most common target area for wave C is between 28.9k and 30.4k, which also houses, very interestingly, the point of control of this move over here to the downside in wave W at 29.2, 29.3k, the red line over here. But even more interesting to me is the triple top that we have here that has been here for a while already. And oh boy, there must be some interesting liquidity over here for maybe a liquidity grab and a move towards the downside. So also if we go above the double top that we have over here at about 27.4k, the moment we take this double top like this, maybe a bit of a range, and move further to the upside, then this is the next area I'm looking for. Especially the triple top at 30k is going to be a very, very interesting area indeed. If we then go to the micro scenario over here, then the bullish scenario is that this is a 5-wave move to the upside. I mean, in the medium time frame bearish scenario, this is still part of a wave C. So we are looking for a 5-wave move to the upside, right? Where this then is a wave 1, 2, potentially 3 is finished. And this is part of a wave 4. And then we get a wave 5 to the upside. So then you have a 5-wave move to the upside. Important to note though, of course, is that after a wave 5, you then expect a corrective structure. So that's going to be very interesting to see how far this wave 5 will reach and what kind of corrective structure will we get. And also potentially that wave 5 might hit this key level. We have the double top, right, at 27.4k. That can be very interesting as well. Now, of course, it is still weekend, and weekend tends to be rangy, but also that's why wave 4s tend to happen over the weekend as well. Now, if we look at the structure of this impulsive move to the upside as it stands, then yeah, wave 1, okay, you can count a 5-wave move over here, then a 2, yes, that is actually nicely counted, by the way, this wave 2. But then we have this wave 3. And what is this, right? This most likely is then a wave 4. And if we go to the lower time frame, you then have a 1, 2, right? A 1, 2, 1, 2, 3, 4, 5, 4, 5. This 4 though is very long compared to this single candle wave 2 over here. So time wise, it looks a little bit weird. But if we look at the volume, which is very important in Elliott waves, then you can see that this move to the upside had the highest amount of volume, which is exactly what you want to see in wave 3s. Then we have a push to the upside on lower volume. So potentially this can be wave 3 already. So that's something we have to keep in mind, that wave 3 is already in, wave 4 is already in, and wave 5 is already in. And basically what we're working on right now can already be a wave B or a wave 2, so a corrective structure for deeper prices, right? So that's at least something to keep in mind. And also the important support that we now have is the white target box over here that we passed through. So that is important, and between 25.9k and 26k. Also currently part of the 0.5 Fibonacci that you can see, and the Fibs that you see on the chart are pulled from the low of 2 to the high of 3, that in case this is the high of a wave 3 and we are in a wave 4, then these are the most common target areas for a wave 4. Currently you see that the 0.236, usually a minimum target for a wave 4, has been very nicely respected so far, but you also have the 382 and the 0.5 as a maximum target. You don't really want to see candles close below the 0.5. If that is the case though, and price moves below the 0.5 towards the golden pocket area, then this already can be a finished first move to the upside, potential B or a wave 2, before then continuation to the upside. However, if this is really a bullish move towards the upside for higher prices, usually price doesn't like to dip too low for people to get in and then continue. So we have to wait and see what the retracements are going to be, because also for a wave 4, this is quite a shallow retracement. Now you also see the Fib times on the chart, and these Fib times are taken from the high of 1 to the low of 2 to then potentially the high of this wave 3, right? Potentially. Because I want to compare this being a potential wave 4 with this wave 2. Usually a wave 4 takes a little bit more time to form than a wave 2. However, as it stands, this low over here is the lowest structure in potentially this wave 4. But as you can see, this low has been made before the 1-to-1 Fib time, meaning that if this is the low of wave 4 in time is going to be shorter than this wave 2. That is not impossible. Wave 2 can be longer than a wave 4. It's just less common, right? So of course, if price is going to move impulsively to the upside, that's absolutely fine. You know, no one's complaining. But at least it's important to know that usually a wave 4, from a probability standpoint, Elliott Wave standpoint, usually a wave 4 is a little bit longer. So having something like this is still on the cards. You know, ranging throughout the weekend, continue the range, maybe go lower to the 0.5 and then move to the upside in potentially a fifth structure to the upside. But that's of course wait and see. If we then look at the CVD divergences, then this is the 4 hour that I'm looking at right now. And you can see on the 4 hour that yes, you could say, hey, there might be bearish divergences. Lower high on price, higher high on the CVD. However, this is a big impulsive push at the moment towards the upside. CVD in this case tends to be leading. And another nugget I like to give you is I like to look at CVD on the right side of new lows or new highs. This is the newest low on the chart. So I like to now look at CVD on the right side. So I will only look at CVD divergences in this structure over here. I'm not interested in what's happening on the left, right? I'm not interested in any bearish CVD divergences here and whatnot, because they tend to be leading, especially after a big push. I now want to see more local divergences, right? So then we go to the 15. Let's see. And if we go to the 15, we had some bullish, but we also have some bearish, bullish divergences. So over here, price moving to the upside, downside, creating a bullish divergences on the blue line over here. And the target for these bullish divergences is this high. So the moment this high is taken, that is when these blue line bullish divergences on the CVD have played out. And interestingly, if we look at the high on the yellow line, lower high on price, but a higher high on the CVD, that is a bearish divergence. But in a bullish market structure, the bullish divergences have a higher probability, because we're playing a probabilities game, right? Has a higher probability of being leading. So always, before I trust bearish divergences, I first want to see the high wicked, usually, right? So the first, or this is now the high, get a bit of a range, take the high, then maybe go back in the range. And if we then create bearish divergences, I trust these a lot more than the first bearish divergences after a new high in this scenario in an impulsive structure has been made, because we're still in bullish market structure. And even though you might see bearish divergences, these might be leading, right? That's the same basically as what we got here in this wave 2, right? We had lower highs on price, higher highs consistently building on the yellow CVD. Played out, but then price moved to the upside impulsively. So these bearish divergences, of course, they can play out in a wave 4, and this being a first structure, second structure, third structure. But just know that from a probability standpoint, in a bullish market structure, in a push towards the upside, there's a higher probability of bearish ones being leading. And I mean, they often say trade with the trend, you know, the trend is your friend. So bullish CVD divergences, in my opinion, would be preferred. And we did have some bullish CVD divergences over here. Higher low in price, lower low on the blue CVD, as I've just shown you, which would be a preferred CVD divergence for me. Now, yesterday I had the strong Viking, and yes, I managed to make it 42 kilometers over 100 obstacles, and I managed to get the medal. You had to finish in less than 7.5 hours, which I managed to do in like 6.5 hours. So I was actually very proud on that. My knees are absolutely like, I can't say that word, they're done. They're done. I had a big struggle getting up the stairs at home to make you guys this video, this update in the early morning. But yeah, I made it. Very, very happy indeed. And this was the route. So yes, you might see 46 obstacles over here, but I had to do multiple laps. So I had to do the 19 kilometers, which is all of these obstacles. And then I had to do another 13 kilometers, which is then 41 obstacles. And then I had to do another 7 at least. And then that is then 20. So if you count this, of course, 19 plus 13 plus 7, it's 40. But there's a few kilometers here and there. So oh boy, this was the most challenging thing that I have done, like for sure, physical, but also of course mentally. But hey, we made it. I went there, and yeah, we got the medal. I promise to keep you guys up to date, and more pictures will be seen also on my Instagram, which you know, check out the memberships as well. But on my Instagram, I'll put some stuff in the group as well in the sports section, because that's why we have the sports section over here. And also just to let you guys know, by the way, the one-pager, the CVD one-pager, if you're interested in CVD, which I think is the best indicator you can use, I made a one-pager. You can download it, click on the link in the description, get to Discord, look at the Koenz updates channel over here for the CVD one-pager, V2 over here. You can download V2 already. But also, if you scroll to the upside, you have the good to know section, where over here you can download always the newest edition of the CVD one-pager. So here you can download, and it has everything that you need to know. Of course, the small things might not fit the page, but everything you need to know to use CVD is here. And if you want to know more, I always have the beginner's guide, which is this one over here. So I hope this video was helpful or valuable to you. Please check out the memberships and then the most recent educational update about CVD, which I think again is the best thing you can use. Thanks for watching and subscribing, and I'll see you at the next one. Bye bye.